qualify for so much money for such an amazing house, just pre-qualification. I honestly never work with pre-qualifications. I don't remember that I ever had. It was always pre-approval, but there were a couple of pre-approvals that they were just inflated numbers, just for the lenders to try to lock in those clients, and then they kind of work out the details. I don't like giving my clients high hopes that they can qualify for the home of, I don't know, $1 million if they can qualify only for like $500,000, right? It's a big difference. It's a lot of money, but it's a big difference in the quality of the home, in the payment, of course, the down payment and all that. One question regarding the qualification. You mentioned for the FHA loans, the student debt is being pushed. How the student debt is being looked at if you're doing the conventional loans or investment property?
It's better because Freddie Mac allows us to use 0.5%, same on FHA or conventional loan, like a deferred payment. A lot of people say that, oh, my payment is deferred for next 5 years or what. So I tell them very politely that this is a 30-year loan. So your payment will start like during the loan, right? So we have to, it's a guideline. So we have to use that. But before it was 1%, now we can use 0.5% of the, if they don't have any payment, then we can use 0.5% of the loan amount and then qualify with them.
And when it comes to the fixed rate mortgages and those adjustable rate mortgages, what is your suggestion? Like for me, much safer is doing the fixed rate mortgage and then just refinance. For me, those ARM loans, right, are kind of gamble, isn't it?
It is, but again, it depends on the market. But for now, this market is for ARM loans, adjustable rate mortgage, because we know the mortgage rates are going down. But like in 3 years before, it was a good market for fixed loan because we knew that the rates will go up. So it all depends. Because either way, we have to refinance. Even if we take the fixed loan and then in 2.5 years, we know that the rates will go down, we will refinance, right? So why wouldn't we take an adjustable rate loan? Because we know the market is going, the rates will be going down. So our rates will not go up. But it all depends, and it's all the, I think, mentality of the clients, because they feel comfortable, especially the first-time homebuyer, feel comfortable with this fixed rate. Because they say that it's fixed, a fixed gives you the satisfaction. But for an investor like you and I, if we see the market is going the downtrend, I would take ARM.
Investors are different people. I mean, we also gamble with the hard money loans and all that. That's completely different amount, different level of stress comparing to the conventional lending.
Yes.
But when it comes to those ARM and fixed loans, if you choose the ARM loan, do you get a better rate at the beginning?
Yes, it would be a little better rate, and it all depends on 5-year ARM, 7-year ARM, 10 years ARM. So just take 10-year ARM and then you get better rates, and then you can refinance anytime. And so one very important thing for the listeners that the prepayment penalty for a primary home, it's illegal now. So there is no prepayment penalty. You can win lotto, you can get inheritance, you want to sell the house, for whatever reason, you want to pay off the mortgage earlier, anybody can do it without any prepayment penalty on a primary home, on a regular loan.
Okay, so yeah, I heard something that when you're paying extra amount of dollars towards your mortgage, you're kind of saving, of course, you're saving the years you're paying the mortgage. What is that trick that people can do so that they can actually save the money in the long term? And is there a limit?
There's no limit because there's no prepayment penalty. So you can pay anytime. The best thing is that I help a lot of my clients that after they get the statement, the first mortgage statement, I sit with them, or just, through the Zoom, I just have them set up a bi-weekly payment. It just only they have to pay one extra payment, the first payment, and then every 15 days, they are paying extra interest for the 15 days. So instead of paying one mortgage every 30 days, they are paying half on the 15th and half on the 30th. That saved them like 4 to 5 years of the total interest. And then if you pay off one more, even just one more payment during the whole year, that can extra save you 4 to 5 years of the interest. So these two small tricks can save a lot.
Self-employed people versus full employed people. I'm self-employed all my life, and until you gain some self-employment history, it's really hard for you to qualify for the loan. If I remember correctly, When I was buying the first property, it was a 2-year to be
Yes.
self-employed, right?
Yes.
And then are there different requirements, regulations for a I'm sure they are, but how much different they are comparing to people who actually are W-2 employees, are full-time employee for someone else?
Yeah, W2 is pretty simple. I mean, even I'm doing a loan right now. This young lady, she started a job 2 weeks ago. She doesn't even haven't gotten first paycheck, but because she was in a college, so I got the college degree because that you can count as an employment and history. And then I got her employment letter and per guidelines, even she can get the first paycheck or salary, but before the first payment, we can use that income. So W2 is very simple, and even if they change the employment, it's fine. And then they need 2 years of history, but not 2 years of history with the same employer. A lot of my clients are self-employed, and actually, we can use extra things on self-employment than W2.
We're talking about self-employed. Self-employed has a bit more stricter regulations, or no, comparing to the self-employed, no?
As long as the loan officer knows the guideline and they know how to read the tax returns, that's the best loans.
Every loan I was doing in my life, no matter the vehicle loan or the mortgage loan, was based on the self-employment history. And then we can finish this section. What are the most common mistakes that you see? I would say the first time home buyers make. One of them, I think, my opinion, is when they get into the loan process, they're still applying for the new credit card. So they're still applying for new loans. And then when the day comes for closing, they're in trouble. So people who are self-employed, you mentioned the loans are not that crazy difficult comparing to people who are full-time employed. But every time when I was applying for the loan, no matter the vehicle or the credit cards or the mortgage, it was a little bit more documentation needed, people who are self-employed, comparing to people who are not self-employed. Also now, for the last couple of years, I'm basically, self-employed, but I'm giving myself W-2 under my own company. But you're still qualifying as a self-employed, right?
Yes. So you're getting paid through your own business. So it is kind of self-employment. A lot of time, loan officers doesn't or know the guidelines. So that's why they get panicked when they see, business tax returns. Business taxes are not easy. But if somebody knows how to read it and how to review the business tax return, is the most amazing thing. One of my processor at Eagle Bank, she always gets so confused about why I do like self-employed people. I just like numbers. And a lot of people don't know that how many things we can add back on self-employment income, like a depreciation, depletion. Right now, I just omit one of my clients' 2-car payment. That was doing a huge difference in his debt-to-income ratio, $2,200. But when I saw the tax return, it's coming out of the business because that was the leased cars. And the business was making the payment. I literally waived them. So it makes work. So it all depends. If a person or loan officer want to do a self-employment, if they don't know and they don't know how to do it, they can ruin the whole thing. So it all depends how you know and what you know.
About those cars, does those cars have to be strictly leased, or they can be financed under the business and used for the business purposes?
Oh, definitely. If they are financed under the business name, they would not even show on the credit report. That's the main thing. So literally, we don't need anything. But because this says this was leased under their name, but the business was paying them, so that's why I have to go through the whole process, or else I would not even see those payments on the credit reports.
I see. The reason why I'm asking, because when we had a car rental business, we were giving our information as a guarantors as a new business. So some cars were showing on the our history and also the business history, right? But back then, I think even you probably saw those cars, and I think we didn't calculate those payments towards my credit, towards my debt income ratio, because they were used strictly for a car rental, but I was there as a guarantor.
Right.
Let's discuss the most common mistakes that people do, and mostly first-time home buyers are, once they get locked into the contract, they keep getting new credit cards, right? And then affect them in the long term.
Yeah. A lot of things that I see, and mostly people are just like, it's not that they're doing it intentionally, but unintentionally, they just hurt themselves so much, especially when they see, 0% interest, and they just buy the furniture for the whole house. And now the payment comes up So it's just gone. Sometimes it's just literally they couldn't buy the house anymore because their debt to income ratio was so tight.
I understand. And we are going towards the refinancing period, probably 2026, maybe even up to 2030, depending how the rates are going down, right? Next 3-4 years. What's the good timing to refinance? Meaning, sometimes you actually going to pay more on the closing costs, right? Then it's going to benefit you to save $100 a month for the loan. What's the good ratio? Is there a good ratio?
It is. We say that whatever you pay for the closing costs and all the costs in the refinance covered within 2 years. If it's not, then it's not a good time to refinance. And again, it all depends how big is the loan. If the loan is big, you might cover it like within a few months, because that would be a difference in the mortgage payment. If it's a small loan, most of the time I say just don't refinance, because your costs are higher than whatever you're just like saving. So it all run the numbers, and then people would know. But a lot of lenders, they want to just do the loan till they don't even go into these details. And they just said, oh, rate. It's not just the rate. Rate and the cost, both things are very important.
I mean, that goes back to the beginning of our story. The lenders, the brokers, right? The mortgage officers, you have insane experience. You went through 2008 crash and you know everything. I'm much younger in the real estate world, right? I have not many experience into that stuff, but I have experience in investment prior for me becoming the real estate agent. But these days, everyone gets the license, everyone can become a loan officer, but the experience matters. And also what matters is when you're working for your client, no matter if you are an agent, real estate agent, if you're a loan officer, if you're a banker, if you are a car mechanic or whatever, work on that piece of paper, on that contract like you're working for yourself. Exactly. And don't overbook yourself that I'm going to call you now, hey, I cannot talk to you now, I'm working with some other client. Well, value each client the same, no matter if you're selling me home of $5 million or, I don't know, 100K.
Exactly.
Both clients are the same. Let's say I'm interviewing different lenders, right? What is the most things that people should ask their lenders, and how they can choose the right lender?
I asked other people, why me? Why are you just choosing me? Because there's so many lenders, like you said. Everybody can get a license, start working, but experience count definitely, and your personality too. And not it's a connection. Not everybody connect with everybody, and a lot of times there is no reason. I cannot say that why cannot I cannot connect with this person, but I just don't. And that's happened to a lot of people too. They just don't connect with everybody. So that's why there are so many agents or loan officers in the market. And I have a team of loan officers. That's what I tell them when I start, and then I start training them. I say, if people wouldn't connect to you, move on. There are so many people. There's so many borrowers. Don't take it personal. There can be any reason they didn't connect to you. So it doesn't mean that either you are bad, they are bad, they didn't do good. Just move on. Don't take anything personal, because I don't connect with a lot of people, just no reason. So just move on. There's so much business. There's so many people that we can help. So just don't take anything personal. That's what I say.